Meanwhile, traders are getting angrier with every passing day. We're condemned to serial bouts of severe volatility, having been trained to dismiss real and knowledgeable risk as just improbable black swans. Central banks can't keep giving markets everything they want, or the volatility in the end will be catastrophic. Hi, welcome to the Market Alert for Wednesday, the 4th of May 2016. And these couldn't be more truer words, to be honest with you. There's a lot of frustration in the markets at the moment. If we have a look at yesterday, you can see that the markets do what you want them to do, or what is expected of them in the first part of the session, or in the pre-market session, I should say. Here you see the market dropping 100 points, only to see another drop of 50 points before the central banks then enter the marketplace and move the markets back when they should have stayed short in the first place, trying to find the fair value that doesn't exist in the market anymore. So yesterday we see the market moving lower. We had 46 points down to here as the market drove through the scalp level there. You can see how the market drove through both the entry price and the scalp after being filled here, of course, and then drove through again down to the 17,700 level this is, and then trading sideways before then finding support as it closed back above, and then this resulting in a loss of 39 points before picking up another 20. The market then rallied, and that's because the currency markets took over the move. Unusually, it wasn't crude oil. Crude oil continued to move lower, as you can see here. As the market moved higher, it was because the central banks were pumping the US dollar, and this drove the market higher. In the evening, we see the market trading sideways. As you know, I don't trade Tuesday evening, always out. But for those of you that did, then we started off with a short. The market came back and took the short out. This is not a true reflection. This is the market actually took this trade out with the buy signal here, even though it's showing an orange circle, a yellow circle with a red line. This is because the short was then taken over by the buy, which then also ended up as a loss. The market then started to come back. At this point, you should have had the warning that the markets are not going to do what you want them to do because of this manipulation that we see here, and then the market trading just in a sideways range and becoming very choppy, which is not uncommon in the evening. As I've said before, given the current circumstances, if you've made a good profit in the first trade, then why not have the rest of the day off, stand aside and leave it, and then wait for the next day, because that's when the volatility seems to be the most important. If you don't make money, if you lose money in the first part of the session, then trade through and you'll pick it back up in the second half. But once you've trousered a few quid, there's no point in actually giving it back in the second part of the session, unless you want to trade through it as well. But here you can see this 100-point move in the quiet part of the session. We didn't get a signal because the range of the bar was just outside of the criteria that we actually use, which is a shame. On the daily chart, you can see we've got the market starting to trend to the downside. And again, notice how in the up days, this is Monday, the volume is low. On the down days, the volume increases, and the same in the previous days of Friday and Thursday of last week as well. So the market really selling when it moves to the downside, but levitating on fresh air, as you can see here, as the prices start to move to the upside. In the news, what have we got from 1:30, 1:15, we've got the non-farm employment change, trade balance figures out at 1:30, prelim productivity. 3 p.m. we've got ISM non-manufacturing, we've also got factory orders, and then the high impact news item, crude oil, which is going to show an increase in supply once more, but that won't matter because the market will go lower, then turn around and move back to the upside, just as we saw last week. This is how the markets are playing at the moment. There is no logic to the fundamentals that we used to have. When we had a supply in crude oil, the stock market would move lower. Now the whole game is just rigged, and it's not just me saying it, but other seasoned traders who've come through 20 odd years of looking at the markets and seeing how they performed in what was non-manipulated times when the central banks kept themselves to themselves. But since 2008 they have taken over and created a massive credit bubble, of which now they're starting to feel the effects of the hangover having done it, instead of letting the banks go bust, which is what they should have done. That's what you do in a free market. So this news is out at 3:30 and then 3 p.m. as well. There's only the manufacturing figures that are high impact there, but they're more or less coming out the same as forecast. I'll be surprised, actually. I would expect those to be lower as well as things start to slow down dramatically. In the implied volatility, 13 and 19, they're starting to increase quite nicely, as you can see in the chart there. We've hit the lows in this. We just need to be allowed to see the market to move sharply to the downside. It's just, as I said, they won't let it do it at the moment for whatever reason. But as the US dollar weakens and they try to keep it strong against the yen and the yuan, which was also devalued on the overnight market, then we are going to see some very interesting moves during the month of May. Right, that will do it for this morning. I will see you in tomorrow's edition. As ever, thanks for watching, and if there's anything to report during the day, I'll let you know. Other than that, see you in the next one.